Welcome everyone to another web series. This is going to be on SDIRA. And so a lot of folks, you guys might not familiar with this term for self-directed IRA, but this is actually a topic that I've been literally looking for people to talk about for the last 3 years. And within SARE, whenever I'm meeting investors, all I hear people talk about is literally only the setup part or how to issue the check. But none of them have actually been able to tell me how are they using it for investments? What are they using it for other than maybe like flips or from private money lending? And so I've been really trying to find people who have worked with other investors, have tried different types of methods, and can report back and let us know how it really works. So a couple of weeks ago, I was really, really lucky to get contacts from a friend of a friend. And I literally texted Anna out of the blue on the weekend, and she was like, yeah, let's chat. And ever since I had that first talk with her, my mind was freaking blown. And especially knowing that Madison Trust is one of the top companies that handles SDIRs, especially for real estate investors, I thought this was like match made in heaven. So I'm going to be really lucky that I've also invited Dana to come out for our upcoming SeerCon in 2026. And yes, you guys heard me right. I am doing this again. I don't know what the hell is wrong with me. This is going to be hella stressful, but I can't wait. So really, I'm going to be using this year to learn as much as I can about really the different markets of all the new changes that are coming on. And I'm going to be bringing you guys the most important topics. And one thing I've had in mind for this last year was really to do more real case studies for how investors are using leveraging real estate in different tax strategies to transform their portfolio. So we will be bringing in a lot of very experienced folks from cost segregated studies to taxes to 1031s to SEIRA, DST, all of those all together for you guys. Without further ado, I've been talking too much about the SEERCon stuff already. Let's turn the table back over to Dana.
Thank you, Annie. And thank you so much for having us here today. We are so excited to be a part of the Sarah community. And Kurt can tell you, I've been so excited about this. I did not stop talking about you. He thinks I'm in love with you. I might be, but it's okay, only because you are providing that much needed tax savings education to investors out there. So real quick, a little background on myself. My name is Dana Udamula. I am the head of strategic relations at Madison Trust Company. And prior to this role at Madison Trust Company, I was the investments manager at Madison for 5 years, took our portfolio from $3.3 billion to $5.5 billion. So a lot of experience. Oh, excuse me, a lot of experience when it comes to alternative investments, especially using your retirement funds and not just real estate. We've seen it all. We've seen hedge funds, we've seen private offerings, private placement, private equity, private debt. I've seen Arabian racehorses. I've seen movies, marinas. I've seen it all. Brazilian sugar for some reason. So there's so much things you can do with your self-directed IRA, and I am so glad that we get to talk about my favorite topic. But before that, let me introduce you guys to the it's my right hand here, Mr. Kurt Power, who is my senior strategic relations executive, and he is going to be, consider he's the power for the SARE community now. Anytime you guys have any questions, thoughts, want to brainstorm, Kurt Power is here as well to assist us today. Want to jump on, say hi, Kurt?
Yeah, it's a pleasure to be here. Look forward to the discussion. It's always exciting for me. I've been in the self-directed space since basically 2020. Prior to joining Madison, I was with a company down in Houston and kind of been around the block in the real estate industry. I've managed 9-figure portfolios for self-storage. I've helped build companies. But this is the space I've had the most fun in, the self-directed space, because we do, as Donna pointed out, we see everything. And the way my mind works, I like to get variety, and we have a variety of clients, so we get to help a lot of people as well. And at the end of the day, that's the part I like the best.
Perfect. Thank you so much, Kurt. So thanks to Annie, we have decided we wanted to do a little bit of a series with the SARE community, right? Because Annie and I, we spoke for about an hour and a half the first time we hop on a call together, and we still weren't able to go through all the things self-directed IRA related. So today we're going to dip our toes into an introduction of what is a self-directed IRA, what can you do, and within the next few months, you and I We're going to be best friends and we are going to eat, breathe, sleep self-directed IRA. So if you are ready, let's go. And of course, please feel free to ask questions throughout the presentations. If you are shy, feel free to put the questions in the chat, because it's really that question and answer session that's going to help us understand the power of self-directed IRA. Because guys, I have seen people make millions out of their self-directed IRAs in all sorts of alternative investments. So here we go. Let me see if you guys can see my screen. Can we see the screen?
Yep, looking good, just like you.
Ooh, we should do this more often. Okay.
Yeah,
Good.
month
Good.
off.
Beats that ego.
Oh, yeah, Annie's good. How do you think she got me to do this at like 9 o'clock at night? Alrighty, so tax-free wealth in retirement. A lot of people hear the word tax-free and they're thinking to themselves, you know what? That's not possible, right? That's not a thing. And then comes self-directed IRAs. Normally, when I do a presentation, I really like to ask everybody, and I think I want to take this opportunity right now. Has any one of you guys heard of self-directed IRAs before? Are you guys familiar with it? Do you have one? Let's take a few minutes here and see if anyone will put something in the chat. Just going to open it up. Oh, we're getting some. Yes, I've heard of it. I've heard of it, not familiar with the strategy, heard of it, but don't have one. Yes, through a real estate friend. Oh, this is great. Wonderful. Okay. Now, when we hear self-directed IRA, how many of you think with the self-directed IRA, you get to invest in those, traditional securities, stocks, bonds, ETFs, mutual funds? Getting some, let's see. Yep, stocks. There we go. No. All right. Haley said no. Sunny said yes, and other alternatives. All righty. I love that you guys we have quite a diverse and knowledgeable crowd today, which is fantastic. So there's a lot of brokerages out there. We're talking Fidelity, Charles Schwab, Merrill Lynch, where they will state, and you will see the ads, right? I have a Fidelity account myself, and it's called Self-Directed IRA. But when I log into my account and I take a look at, okay, what can I invest in today? I get 3 options. I get to pick the funds I want to invest in, and my retirement money gets invested into these funds. And you know what's in these funds? Sometimes it's the typical 60-40 portfolio, 60% stocks, 40% bonds. Sometimes it'll get a little bit depending on the risk tolerance. They'll say there is alternatives, like say foreign stocks, but truly there is no alternative outside of the traditional Wall Street stocks, right? So in a sense, these big brokerages don't provide true self-direction. That's where we come in. A true self-directed IRA is an IRA, an individual retirement account, where you get to invest beyond stocks and bonds. That means you get to invest in real estate. And I'm not talking about just REITs. And yes, you can invest in REITs too using a self-directed IRA. I'm talking about tangible property where the deed belongs to your IRA. I'm talking about syndications where you get to pool your money with other investors so you can either buy residential properties or commercial properties. I'm talking about apartment complexes. I'm talking about senior living facilities. I'm talking about, I don't know, a luxury resort, a spa, a lakefront, Lake Austin spa, if that's what they're doing right now, raising money to purchase, but actual real estate property. But let's take it a little further, because today we really want to talk about what else can you invest using your self-directed IRA is really anything. There's only 3 things that the IRS doesn't allow you to invest in. 1, S corporations. 2, life insurance. 3, collectibles. And of course, before anyone asks, anything that is federally illegal, you cannot invest into it. I've gotten the question multiple times. The most common question is, Donna, can I get into a cannabis farm? While it is statewide legal, it is very not legal federally, and therefore, if it's federally illegal, you cannot invest in using a self-directed IRA. Therefore, in my years in this industry, I've seen a lot of my clients get very creative, including from real estate to precious metals, to private equity, and like I said before, Arabian racehorses, yachts, marinas. We had one client, this was a really fun one, invested using their self-directed IRA to a movie, the Whitney Houston movie. They lent money to that. And it was just fantastic because you truly are able to take control of your retirement money and invest into things that you're passionate about. So you find folks here, you guys are real estate professionals. That means you are knowledgeable, you're the experts in real estate. Now imagine if you have the flexibility and the control to really invest in what you guys are experts in. Wouldn't you take that chance and then take it a little further? Not just invest using your IRA, but get the capital gains or profits or rental income. Tax deferred, or my favorite strategy, which we'll talk about a little later, tax free. And that's the power of self-directed IRA. It goes beyond Wall Street. It goes beyond stocks and bonds. It takes you to those alternative investments that you believe in. And really, guys, the American dream is real estate. And every day, every single year, it's getting harder and harder for people to get into real estate. But earlier this year, before all the volatility up and down, when we did a little bit of some of the studies that went out, there was $44 trillion of retirement money out there between 401ks, pension plans, IRAs. Imagine if we are even able to tap into a part of that $44 trillion into assets that we are experts in, such as real estate. How powerful that compounding effect will be. So self-directed IRAs gives you that flexibility and that control. There are different types of IRAs, and they're all self-directed too. For instance, you can have a traditional, Roth, SEP, simple, and inherited. All these types of IRAs can be self-directed IRAs, but here's the key thing. You can't go to Fidelity or Charles Schwab and tell them, hey, I want to buy this multifamily property. They're going to be like, that's not possible. That's why you need a very special custodian, a self-directed IRA custodian, in order to be able to invest into those real estate asset classes, those alternative asset classes. And that's where companies like Madison Trust come in, because that's our specialty, right? We don't do stocks and bonds. We have, in the last 11 years that Madison Trust has existed, we had make sure that our expertise lie in how can we help our clients. When they come to us, they're like, Donna, I want to buy a horse. Yes, this has happened too. We are able to help you do that. We can't find the horse for you. You're going to have to find the horse yourself, but we can help you make it happen, help you diversify your retirement portfolio into that asset that you truly believe in. I can see Annie's face. She's like, oh, I'm going to be doing a lot of things with this.
Also, I'm thinking it's a horse. It doesn't sound like an investment. So I'm like,
So Arabian racehorses, amazing. But that I feel like is a passion project for a lot of people, Arabian racehorses, right? But cattle, for instance. Now that's an amazing investment, and you can invest into cattle using retirement money. Yep.
States.
Exactly. That really is the capital gains there. But we have a lot of clients. A majority of their assets are really in cattle, especially in like Midwest, right, Kurt?
Oh yeah, definitely. I mean, agriculture,
Oh,
one of, if not the largest industry in the Midwest. People, again, passionate about that. So why wouldn't they take a retirement account and get the tax benefit investing in what they know best?
he really wasn't kidding about those hot-looking ranchers out there.
No, I was not. Hot and smart. That's what we go for.
That's my autobiography right there.
So let's talk a little bit, and since we are on the subject, right? Benefits of using self-directed IRAs for real estate. And of course, because it is the subtle Asian real estate community, we want to focus on real estate. But why use self-directed IRAs for real estate, right? Why not just use your savings? Why not just use your checking account, right? Why use your IRA? Why use your retirement money? First of all, I've met a lot of people, while I've met the really high net worth investors with millions and millions of dollars in their retirement money, I've also met the people that regret not planning for their retirement. So now they're edging towards that age of retirement, right? They're trying to get closer to that 65 and they do not have a retirement egg and they're concerned. So I always say start. If you haven't started 10 years ago, today's the best day to start. It's never too late. Saving up for retirement is very important. America is heading towards a retirement crisis, and that's the truth. And your 401k might not be enough. And if you're not a W-2 employee, then you might not even know that there are other ways you can actually save up for retirement, right? You can have SEP IRAs, you can have simple IRAs, especially a lot of real estate professionals are entrepreneurs. You can have solo 401ks. But it's so important to save up for retirement so that you do have that cushion, that buffer when you come to that certain age where you don't have to depend on, I need to close this deal. I have to close this deal. I need to make sure this happens. So retirement is very important, guys. And don't let anyone tell you otherwise, because you need to have multiple forms of streams of revenue, cash flowing in, especially those at that time when you're not a young buck, not a young chicken running around. You really need that. So now, with retirement and now real estate, you're really putting two very powerful concepts together. Real estate appreciates, real estate is tangible, and honestly, real estate has always been a better steady return asset class time over time, right? Now take your retirement account, for instance. You have your retirement account, and let's say you have $1 million in your retirement account right now in a traditional IRA in one of the brokerages invested in stocks and bonds. What if you're able to take $200,000 of it, right, and put it into a property in Iowa, since we started this whole conversation in Iowa? I'm pretty sure you can get a nice mansion for $200,000 in Iowa.
You could
That's
probably get two mansions in Iowa for 200,000.
and he's going to be making a few calls after this to realtors in Iowa.
I don't know. Why would I want to go to Iowa though? And there's a lot of really good real estate professionals over there.
We're about to find out, right? But we get that. We take that, right? And that $200,000, we put it into a self-directed IRA. We purchased those two mansions in Iowa. And in a few years, like say 5 years, right? It appreciates. Now it's $600,000. Okay. That $400,000, guys, essentially, if you used a traditional IRA, that's a pre-tax IRA, it's tax deferred. If you use a Roth IRA, and Roth IRAs are my favorite strategy, that $400,000 appreciation is tax-free. So that means if you were to sell these two mansions in Iowa 5 years later, right? You invested $200,000, you got $600,000 back into your Roth IRA. There is no capital gains. That $400,000 is completely tax-free, and you can continue to reinvest. You can continue to reinvest over and over again and keep compounding that and growing that retirement net. That's the first and foremost most important benefit. Oh, did someone ask a question? Nope. Okay. That's the most important benefit of using a self-directed IRA. Then, of course, diversification. The Oracle of Omaha, I'm sure we're all familiar with. What was his most famous saying? You never put all of your eggs in one basket, right? And you do the same thing when it comes to your retirement money. You don't put everything into stocks or everything into bonds. You put a little bit in stocks and a little bit in bonds. Back in my previous life, I was a financial analyst, and trust me, Wall Street is very dear to my heart. I myself have stocks and bonds, but you know what? I also have real estate. I also have precious metals, because diversification is so important. If this year has taught us anything about the market volatility and how sometimes the market is not governed by economics, it's governed by market sentiment, diversification comes into play to protect your retirement account, to protect you against inflation, right? To protect you against those interest rates. Diversification is important. And that's where real estate plays such a huge and important role. Then, of course, asset control. You are real estate professionals, and you guys have full control over this versus giving an asset manager your money, and you have no control what stocks, what bonds, what funds your investment gets invested into. Here, you get to use the expertise you have, the certifications you have to find that deal you want to invest in, and then use your money to invest in. Because if you guys, and I know all the real estate professionals I have met, and of course, and all the members of the SARE community I have met, I know you guys take your jobs very seriously. You guys take your business very seriously. So when it comes to doing due diligence and getting that best deal for your clients, you do that. So I know you're going to do the same when it comes to your retirement money and you're making that decision to purchase, get into a deal. And of course, long-term wealth building. Remember that example I said, that 200,000 went to 600,000? You're not going to just cash it out now. You're going to continue to reinvest. Self-directed IRAs are that tool that helps you build generational wealth and long-term wealth, and wealth that can be sustained, wealth that can compound, wealth that can grow. And I cannot say enough things about self-directed IRAs because I have seen how people have been able to grow it within a few years because of the choices they made, because they invested in things that not only did they believe in, they were the experts in. And majority of it was real estate. All right. Well, I feel like we went through this a little bit while we were discussing, right? Why real estate? My question to you guys is why not real estate? Like if you are using your taxable money, your savings, your checking account money into real estate, why wouldn't you put your retirement money into real estate, right? Some of my newer clients, right? They are not real estate professionals. They might be doctors. They might be attorneys. So they might not have the real estate background. What they typically do is they want to get into self-directed IRAs. I mean, real estate really, but they're afraid because they're not the expert. So they'll actually buy a beach house, a vacation property that they know when they're ready to retire, they'll want to take it out from their IRA and live in it. They'll just purchase a beachfront property, keep it in their IRA, rent it out, let the rental income keep accumulating tax deferred or tax free. And at the end of it, when they're ready to retire, they have, boom, a nice vacation property. And that's a new investor who is not a real estate professional. There are some real estate professionals, I've seen them start off with like one single family residential, and now they're holding about 20 plus stores like 2 years later because they just kept understanding the power of self-directed IRAs and purchasing deals as they come through their retirement money and renting it out. And the rental income keeps growing. So really, real estate has always been that one key asset at Madison Trust. Right now, we are just a little shy of $6 billion in our portfolio. And I can tell you more than 50% of our portfolio is really real estate. And in real estate in all sorts of forms, tangible real estate in syndications, private deals, private credit. It's really fantastic. Oh, I think I just did something. Can you guys still see the screen?
Yep.
Oh, perfect. I do see some questions coming up. All right. Can I create an SDIRA for my kids? Tina, yes, you can. They're called custodial accounts. One of our youngest is like 5 years old. So that's absolutely start young, right? Can I use SDIRA as a collateral for loans? Ooh, Annie, great question. Definitely tune in for our second episode, the do's and don'ts of self-directed IRA, the prohibited transactions edition, to learn more about that. Great questions, guys. Okay. In the beginning, I said there's different types of self-directed IRAs. So not just self-directed IRAs, even your normal IRAs at brokerages, the types remain the same. Traditional IRA, Roth IRA, SEP IRA, simple and inherited. SEP and simple IRA are really if you are entrepreneurs, small business owners. Traditional and Roth is really for you. Now, traditional IRAs are IRAs, what I call tax-deferred IRAs. That means when you are contributing from your income, yearly income to a traditional IRA, you're not going to pay taxes up front. You're going to defer the taxes up until later. Like say you decide you want to retire at 70. So at 70, you're ready to retire, right? At that time, you're going to, if you take money out from your traditional IRA, you're going to then pay taxes at your current income tax level, right? So by the time people typically retire, their income tax bracket lowers. So you're essentially not going to be paying as much tax as you would pay right now if you're a really high income earner. Traditional IRAs are great. A lot of people get into self-directed IRAs using traditional IRAs. Now, even though it's tax deferred, your rental income, your capital gains, while it's within the IRA, doesn't get taxed. Only at the time you take it out of the IRA will it get taxed. So I do want to really make that clear. But my favorite IRA, and Kurt can attest to this because I don't stop talking about this, is Roth IRAs. Because essentially with a Roth IRA, let's say you contribute to an IRA right now, right? You pay the taxes up front. However, once you pay the taxes up front and then you invest, the capital gains, the profits are completely tax-free. So the appreciation, and this is where real estate is really important, right? Real estate has that ability to appreciate like there is no tomorrow. Tax-free appreciation, you can't beat that. That's what's important. With a Roth IRA, what makes a Roth IRA tax-free is if you had the Roth IRA for 5 years and you are above the age of 59 and a half, typically around that time is when people start taking their money out. That requirement criteria makes it essentially tax-free. I want to share a quick story of a real-life example, a famous real-life example that everyone knows. Is anyone familiar with Peter Thiel? Could be pronounced Peter Thiel, but Peter Thiel. Yep, I see some heads nodding. So, and we all know he made a few billions, right? So, in 1999, Peter Thiel invested into PayPal founding shares. Back then, PayPal was private. $2,000 using a self-directed Roth IRA. Little known fact. The $2,000 later, when PayPal IPO, did everything, sold out, once he got his cash out from PayPal, he got $50 million out into his Roth IRA. So $2,000 went to $50 million. He didn't stop. Peter Thiel is a very sophisticated investor. He is very intelligent, and Peter Thiel is able to find these new startups. That's one of it now is Palantir Technologies, by the way, that is able to grow exponentially. What he did is he kept investing into companies that he believed in, he knew, he understood, he saw potential in. Fast forward 2019, $5 billion in his Roth IRA. $5 billion. Now, Peter Thiel at this time, this year is 57 years old. In 2.5 years, when he's 59 and a half, that money is completely tax-free. Now, ProPublica was one of the first platforms that really put this information out back in 2020 actually. That was $5 billion. I have since then read multiple reports where analysts project by the time Peter Thiel really retires, which I don't think he's going to ever retire, but by the time he actually comes to that age, 59 and a half, which makes his Roth IRA tax-free, there is potential that his Roth IRA could be $50 billion because there is not information right now, publicly available information on the assets or the value of his Roth IRA since the last time we heard about it, 2019. But do you see that? Even though it is what? Like say 27 years, 28 years, $2,000 into billions? That is the power of not only compounding, not only alternative investment, but Roth IRAs, self-directed Roth IRAs. Mitt Romney, he did something very similar, but the last time I just heard more information about his Roth IRA, he was at around $100 million, and even that is a huge number. Again, the key term, tax-free. So yes, we have cost segregation, we have 1031 exchanges, but what gives us the ability to have that much of tax-free appreciation in an IRA, right? And that's why self-directed IRAs really are those powerful tools out there. It's like I know my slides already, like I told the story ahead already. So compound growth over time. So this, again, the benefits of the IRAs, reinvesting your rental incomes, whether it's tax deferred or tax free, and then leveraging. Now, this is a question I always get. Well, Donna, I want to buy real estate, but I only have $100,000. The property I'm looking at is about 150. Where do I find the $50,000, right? Okay, here's the thing. With self-directed IRAs, you can't get a conventional loan, a mortgage, because there are certain rules. However, you can get a loan. It's a very special loan called a non-recourse loan. Basically, a non-recourse loan is the only recourse for this loan is the collateral, the property itself. When an institution is providing the loan, they don't check the owners or the IRA account holders' credit history, pay stubs, their background. They're only giving the loan based on the property, and that's it. So really, if it defaults, the bank, the institution cannot come after you personally. They can only come after the property because that's the recourse. Now, non-recourse loans do have a higher interest rate because of the risk associated with it. And a lot of people don't know how or where, who they can get a non-recourse for. So we actually have a list of non-recourse lenders that we work with, financial institutions that we trust, that we actually share with our clients when they raise their hand and they want to know, hey, I want to buy this property, but I don't have enough money. Now, that's the easiest way you get a non-recourse loan. We have also seen other things. Seller's financing. Yes, you're able to do seller's financing using your IRA. People, again, little known fact, right? So if you have a property that you like, right? And you want to purchase it with your self-directed IRA, you can talk with the seller and let them know, hey, I want to do seller's financing. Discuss the terms, interest rate, the time span of the loan. Of course, the property is going to be the collateral. You pay them the amount you are paying them. And then after that, your IRA is able, essentially, there'll be a promissory note in your IRA, and your IRA will be paying the seller agreed upon payments up until the loan is satisfied. And then the note changes into the real estate as the asset in your IRA. Again, this is a non-recourse loan because between the seller and yourself, your IRA has the buyer. There's no credit check, nothing going on. It's only between the IRA and the seller, and the only default is the property. So if the loan defaults, the collateral is the property. So again, very, very creative and unique ways. And then, of course, I've seen the other thing is where if you guys are looking at a really big property, now we're talking commercial real estate, a few investors pool their self-directed IRA money together. They pool their personal money plus self-directed IRA money, and they get a nice chunk of change to buy a really big property. What's the saying? Go big or go home. This is one of those instances you can go big or go home, where you just pool all of the money together, and instead of buying a triplex, you ended up buying an office building. There we go. But there's so much creativity because you have control versus someone else. And I think that's the part people forget. With self-directed IRAs, it's like clay. You can mold it to fit your goals, your financial goals, your investment goals, as long as you know what the goal is. There's so many ways. And of course, that's why we're here, the self-directed IRA experts. If you have an idea on wanting to do something, talk to us. We'd love to chat with you. We love to share with you our experiences on what our other clients have done, because everything I'm sharing right now here today is things I have seen my clients do. I've seen them tried. I've seen what succeeds, what needs a little work, what has really provided that long-term growth in their IRAs. Ooh, so few things we want to consider. Now, I know, Annie, you and I, we discussed we're going to be doing a few, our next episode is going to be the do's and the don'ts. So that episode is going to be, I make it sound a little scary. That episode is not going to be scary, but it's going to be very important. But a little quick heads up on some compliance considerations I'd always like people to know. Again, your retirement money is very important. So we always emphasize, if you are not sure, talk to us, because we want to ensure something doesn't happen that will take the tax advantage out of the retirement money, because once the tax advantage is gone, it's just like any money there is out there, right? The tax advantage is what really helps. So, few things to keep in mind when it comes to self-directed IRAs. IRS rules. You must remember your retirement money is regulated by IRS. At the end of the day, there are certain rules in the IRS, and that's why prohibited transactions is very important. There are certain things that you cannot do. There are certain people that you cannot transact with. Something we'll talk about in the next episode is what's called disqualified individuals. Sounds a little scary, right? So you, as the IRA account holder, is considered disqualified to the IRA investments. So what does that mean? If you have your IRA, Roth IRA, You purchase that $200,000 property in Iowa. You, as the IRA account holder, cannot benefit personally from it. That means is you cannot go live in that property that is owned by your IRA. That's considered a prohibited transaction. So if you bought a beach house in Florida, Key West, right, from your IRA, you cannot go spend a weekend in the beach house just because, hey, my IRA owns it, I should be able to do it. The IRS strictly prohibits this because you are considered a disqualified individual. There are certain people in your family that's considered disqualified as well versus certain people that are not disqualified. For instance, your spouse is considered disqualified. Your kids are disqualified. However, your siblings are not disqualified. Your nieces and nephews are not disqualified. So at Madison Trust, if you actually go to our site, we have a huge amount of information on who's disqualified, who's not disqualified, because honestly, guys, it's a lot of people to keep in mind, but we always want you to check before getting into a deal with someone who's disqualified, which will, again, take away that tax advantage. UDFI and UBIT. So while essentially most IRAs are either tax deferred or tax free, there are certain things that could happen that will maybe cause some taxation. The most easiest thing is the penalty. So if you take money out of your IRA before you hit 59 and a half, you're going to get a 10% penalty, right? If there is some prohibited transactions done, you're going to get penalties or even lose the complete tax advantage of the IRA. Then there is this thing called UBIT, unrelated business income tax, or UDFI, unrelated debt financed income. So what does this mean? The purpose why IRAs are tax-free or tax advantaged is because it was created by the government back in 1975 to help the American people really have a little bit more control of their retirement and retire richer, because they understood Social Security isn't enough, pension plans aren't enough, just 401ks aren't enough. People need to have more avenues for retirement, right? But in these IRAs, you need to be able to have passive income for you to really obtain the tax advantage. The minute your IRA goes from earning passive income to active income, at that point is when you get this tax called UBIT. I don't see this happen often. I will let you know, I can count with my 10 fingers how many times I've really seen UBIT, but UBIT typically happens if there's an active business within your IRA. For instance, if your IRA purchases a pizza shop, right? A pizza shop, it's an active business. Every single day there's money coming in, money going out. That could incur UBIT because now your IRA went from passive income to active income. Rental income, though, is not considered a UBIT incurring triggering income. Rental income, regardless whether it's an apartment complex, a triplex, a duplex, commercial property, it's completely passive income. Capital gains, again, passive income. Royalties, passive income. So if ever you're in doubt, talk to the professionals, talk to your financial professionals on understanding UBIT and UDFI. And of course, the custodian. It's so important, and some of you might be realizing that right now. The role of the custodian is important. Now, most self-directed IRA custodians are, again, passive. That means we're not fiduciaries like these big brokerages. I'm not going to come to you and tell you, hey, Annie, I got a great deal for you. I think you really should invest into this deal, okay? Guaranteed 37% returns. First of all, if someone says guaranteed, run. Run for the hills, okay? That's the first red flag. 2, 37% return, another red flag. But that's the difference between fiduciary and passive. Madison Trust, we're passive custodians. That means we're not going to tell you what to invest in. We're not going to bring you deals and tell you, hey, you should really put your money into this deal. We are merely the vehicle. As the custodian, we give you access to your retirement money so that you can invest into the deal, that property that you want, because you're the expert in. We'll make it happen for you. And if you're not sure or you have multiple ideas, we'll sit down with you and brainstorm because, again, we're the IRS experts, right? We are the IRA services professionals. So you might not be well versed with IRS regulations, UBIT and UDFI. We know that, so we can let you know, well, Annie, you can do that. Well, typically you can't do that. Well, this is the guidelines on this so that your tax advantage is protected. So the role of the custodian, while they're not advisors or fiduciary, is so important because the custodian is going to help you protect your tax advantage from doing something wrong. I've had so many conversations with clients where they're like, Donna, I'm going to buy this property and my son's going to rent it from me. And I'm like, whoa, Jerry. Okay. Yes, you can buy the property, but typically your son is a disqualified individual and cannot rent this property from you. Because those are the things that people typically don't research or don't know about. And those are those tiny little things that can make your entire retirement account lose its tax advantage. And that's why the role of the custodian is so important. So when you are looking to open up your own self-directed IRA, working with a custodian who understands self-directed IRAs, who are great at customer service and who have the time to talk to you is absolutely important. With that, real quick on how can you get started if you are interested on this, right? We make it really simple because self-directed IRAs, people already have this misconception it's complicated. It's not. Setting it up takes 10 minutes, just like you'll set up any other IRA out there. You can open any type, like I said, right? You can open it for your kids. You can open it for yourself. You can open it for your parents. If you have inherited IRAs from someone who was deceased, you can transfer that too. You can open up your self-directed IRA, and then once it's open, you can fund it. There's a few ways of funding a self-directed IRA. You can either transfer an existing IRA. So if you have an IRA elsewhere, whether it's a Charles Schwab, Fidelity, you're able to transfer the full or partial into your new self-directed IRA. You can roll over plans from previous employers. I'm sure most of us here had a W-2 job at one point, right? And once you left that job because you wanted to follow your passion in real estate, what did you do with that 401k? I can tell you right now, 80% of the time, people forgot about it. That 401k can be rolled over into your self-directed IRA. We have a lot of people who forget that they have like $100,000 401k sitting somewhere. Most of you are in the West Coast. You know what West Coast has? A lot of tech money. Big 401ks, 403bs, huge employee-sponsored retirement plans that can be rolled over, which is fantastic. And then finally, contributions. So contributions are the one type of way to fund your self-directed IRA that's a little limiting, and I'll explain why. Contributions are the money from your current income of the year you're able to contribute into your IRA. So for traditional and Roth, if you're 50 or under, $7,000 a year. If you're 50 or older, $8,000. SEP, you can do about $70,000. Simple, about $13,000 to $20,000. But the traditional and Roth IRAs are normally for individuals. So if you don't have any retirement money, that might be a restriction, right? Because you can only contribute $7,000 or $8,000. But if you have retirement money, an IRA, a 401k, 403b, a pension plan, then there is no limit. So that's something I always want to be clear on. And once your self-directed IRA is funded, you can work with our fantastic investments team to purchase that property. And the process, it's going to be very simple. I know we are going to be at another time going through how to purchase real estate, the documentation needed, but also the different ways on purchasing real estate. But real quick, if you were to buy that house in Iowa, we'll need the purchase contract. How do the closing statement, title policy if applicable, and of course the draft of the deed, because the owner, the purchaser is not going to be John Doe. It's going to be Madison Trust Company for benefit of John Doe and his account number, because essentially the owner of the property is your IRA for your benefit, not you. The EIN, if an EIN of social is needed, the social is not your personal social. You're going to be using the EIN associated with the IRA because everything pertaining to the property is going to be your IRA. All the expenses are going to be paid through the IRA. The rental income will come back to the IRA. At no point will you use your personal money to pay any expenses, and at no point will you be taking the rental income without requesting it from the IRA. It's all belongs to your IRA, and it is the IRA that is going to be the owner of that property. And then, of course, if it's not real estate, if it's like, say, a private offering, right, we'll ask for the subscription documentation, the investment documentation. But again, who is the investor? Is the IRA on your behalf. So I know that was a lot of information. So, and I see a lot of questions coming up here. I'm going to have this slide up for a little. This is our contact information. These QR codes will also take you to some fantastic resources on our site, madisontrust.com. We actually have resources for every possible scenario out there because we have seen it all. Different asset types, the do's and the don'ts, who's disqualified individual, who's not disqualified individuals. We have some great articles, videos, animations. So definitely go to our site. This is my information. And this is Kurt's information as well. We love, love, love getting questions, as well as if you guys ever have a situation you're not sure you can do with your self-directed IRAs, give us a call. Okay. At the end of the day, the reason why we wanted to be a part of the SARE community is we have heard from a lot of credible sources how amazing the community is, helping each other, not just grow, but really get to that financial freedom. And Madison Trust, that's one of our core beliefs and values for our client. We want to help clients retire richer and comfortably, and we want to make the process of retiring richer accessible and affordable. So with that, let's take a look at some of the questions, guys. Ooh, we got 11 questions in the chat. Let's see. So Tina, yes, definitely can have self-directed IRAs for kids. Good God, I don't even think my Fidelity Roth IRA went up more than 80% of the last 10 years. So good. This is what I specialize in, sellers financing, single family and multifamily. Francisco, definitely shoot me an email. I'd love to chat with you more. That's awesome. Is non-recourse loans the same as hard money? No, for hard money, they can still go after the individual. Correct. Now, here's a fun fact, guys. With hard money, we actually have clients who do hard money lending from their self-directed IRAs. Yes, you can lend money, do hard money loans from your self-directed IRAs. That falls under private credit. Right? It's so crazy the things you can do. Would this be good for a house flippers to use or has private money lenders? Definitely, absolutely fantastic. Self-directed IRAs for private money lenders. We have a lot of private money lenders. Twofolds, guys. One is they either are the private money lender through their self-directed IRAs, or some of the bigger private money lenders raise money using investors' self-directed IRAs. So when they need money to actually lend out, they'll have their investors lend them money through their self-directed IRAs for, like, say, 1%. And then they'll lend the money out to the borrowers for, like, say, 2%. So they just made 1% on someone else's money. Would this be good for house flippers? Yes, we do have clients who are house flippers. A little something to note about house flipping. There are certain, it really depends, right? Sometimes the IRS is a little subjective versus objective. So at one point, if house flipping becomes an active business where you're flipping like 5 houses a month for a span of 12 months, it could be considered active business, and you may incur UBIT. And I say could and may because it's very subjective. So if ever you're not sure, this is when we definitely ask you to consult your financial professional so that you're not paying taxation even before you retire. But I haven't seen that happen often in my experience. Sunny, I may not be asking this question correctly, but would we be able to protect our IRA assets in the same way as if it would be a primary asset, where an individual would put the primary asset into a trust? So I might have a question about that. So is it like, let's say you go into bankruptcy, protect your IRAs? Is that what you're asking? Or are you asking more in the lines of, can you put your IRA into like a trust, like estate planning? Because estate planning, yes, absolutely.
Hey, Dana. Yes. So essentially, it would just be more along the estate planning aspect of it, is what I'm thinking of. And then also, I guess, just to kind of take this question a little further too, is, tying into like elderly planning and how we can I wouldn't say necessarily, I guess some flat out just say like hide money from the IRS, right? As we get older, we want to go ahead and, plan accordingly and, have financial reserves and whatnot, and possibly just, save it for generational wealth for, our grandkids, et cetera, et cetera.
Absolutely. Great question, Sunny. So when it comes to estate planning, absolutely you can put your IRA into estate planning trust. We see this happen all the time. Now, you mentioned a very interesting point, right? Elderly planning, like how can we not show this money to the IRS? With IRAs, because they are regulated by the IRS knows about it. At the year end, every custodian, right, and Fidelity, Charles Schwab, us, whether we're self-directed or not, we are mandated to report the value of the IRA to the IRS. It's called a Form 5498, where we report the fair market value. It's not an appraisal. We don't need an appraisal. Typically, it's the client reported value that we report to the IRS. Does the IRS really do anything with it? Not really. Now, the power of the IRA, self-directed IRA, is the IRS cannot come after you unless you did something in it. For instance, I spoke about Peter Thiel, right? When this whole thing came up in 2019, about $5 billion that'll essentially be tax-free, Congress made a huge fuss. But it was completely legal. So while Peter Thiel didn't hide it, it was shown, nobody could come after his money. So he did essentially create generational wealth. So it's more of a not hiding money from the IRS. They'll definitely see it, but they can't touch it, because as long as you adhere to regulations, your money is yours. There's no way they can touch it. And that's really the power of knowing, is it a traditional IRA that's good for you, or a Roth IRA? Because if it's a Roth avenue you go to, it's essentially untouchable.
Thank you for that.
Of course, absolutely. Great question. Can we rent from that beach house? Oh, you answered it in the example. Thanks. Okay, perfect. Can I still do a backdoor Roth IRA contribution like I do with? Yes, absolutely. So backdoor Roth IRAs are, people think it's a loophole, guys. It's not. This is tax code written in IRS regulation. So essentially with Roth IRAs, after a certain income level, it's called modified adjusted gross income, you can't contribute to a Roth IRA. That means you earn too much money, which, by the way, congrats. That's amazing. But the IRA is like, hold up. You cannot now contribute to a Roth IRA because you're about to get a disadvantage over other people. But then they say you can set up a traditional IRA. That's the IRA that you're going to tax defer. And then you can do a Roth conversion. So you can essentially set up a traditional IRA, contribute to a traditional IRA, or transfer money from other IRAs or retirement plans you have into the traditional IRA, and then do a Roth conversion. That's completely fine. That's written into tax code, and that's what's called a backdoor Roth conversion. And there's no income limitations for that at all. If you have a 401k, again, the employer-sponsored plan, you can directly roll it into a Roth IRA too. That is considered a Roth conversion as well. And then Tina said, similar to Annie's question, will I get taxed to roll over funds from a traditional IRA to a SD IRA? Great question, Tina. No, you do not. So self-directed IRAs, we are all in the family of retirement money. So whenever retirement money moves from IRA to IRA, as long as they're the same type of IRA, like traditional IRA to traditional IRA, Roth IRA to Roth IRA, you do not get taxed when you're moving money between IRAs. The only time you will get that taxation is, like I said before, the backdoor Roth conversions. So if you have pre-tax 401k money, that's traditional 401k money, and you decide to roll that into a Madison Trust Roth IRA, now you're going to get taxed at that current income tax level because you decided to switch the type of taxation. You wanted to go from pre-tax to post-tax. However, if you think, you know what, I don't want to pay taxes right now, it's not the right time, I'm not gonna do it, then you can roll it over from your traditional 401k to a traditional IRA. You will not get taxed. So something to keep in mind, the type you're switching from, because if not, it's all in the umbrella of retirement money. You do not get taxed, and there is no limit to the rollover. The only limitation comes with the contributions, and for traditional and Roths, it's 7,000 if you're 50 and under, and 8,000 if you're 50 and older. But if you have retirement money elsewhere, there's no limit. I've seen people move millions of money from their existing IRA to a self-directed IRA. Okay, Sunny, there's another question, but if you used, I think you did touch on this topic just now, but if you used your entire IRA to purchase the IRA asset and have no more funds, are we allowed to use personal funds to cover operating expenses? If not, what would be our option? Great question, Sunny. You cannot use your personal money to anything with the investment. So if, rule of thumb, if the property is $100,000, right? And all you got is $100,000, a little bit of a problem. Now, you might have to think about that non-recourse loan a little bit right now, right? So that you can have some money. Like, you wouldn't put all that $100,000 into that property. Maybe you'll do $70,000, and then the rest will be a non-recourse loan. So you still have that $30,000 in your IRA to cover expenses, because the expenses needs to come from your IRA. So typically, what people do is they have a little reserve in their IRA. And when the rental income comes and it keeps collecting in their IRA, they're able to pay their expenses from that as well. But if you use your personal money, it'll be considered a prohibited transaction, because again, you yourself is considered disqualified to your IRA investment. Okay, guys, great questions, by the way. I don't even feel like it's 10 o'clock. I have so much energy here. All right. How does all of the back-end accounting work to figure out the cost basis for some of the more active investments like Flipper does a ton of flips? Is that done separately from Madison Trust? Yes. So with control, with great control comes great responsibility. Us has Madison Trust, right? We are passive. We are not having a really tight oversight. We don't keep the records. We always actually trust the records you guys give us. So it's very important if you have active investments, you keep the record keeping. There's this really awesome product called a checkbook IRA. It's basically like supercharging your IRA and giving you a limited liability company within your IRA, but with IRA provisions. We have a whole episode planned for that too, guys. But if you're a flipper, that is the product I would recommend for one reason: checkbook control, right? Remember before when I said if you're buying investment, a property through your IRA, it needs to be named Madison Trust Company, FBO, your name, your account number. If you're a flipper, that becomes a little annoying because you have to keep coming back to Madison Trust with all the paperwork, right? So for people who are doing more investments, we set up this checkbook control model where we basically upgrade them to an LLC. There's a setup cost for that, but you have a limited liability company beefed up with IRA provisions. So again, tax advantage is protected, but you also get a bank account associated with it. So at any point, you're able to write the checks on your own. You are able to go purchase that property, fix it up, sell it, rinse and repeat the process without coming to Madison Trust every time. And oh, let me tell you, checkbook control IRAs are very popular, especially with the real estate folks, because they love the fact that they can just write the check. They don't need to come ask permission. They can just do whatever they want, especially if you're doing tax liens. Yes, you can do tax liens with your IRA too. Just saying. Okay. Can we 1031 properties that are purchased with an IRA? So 1031 and IRAs somewhat do the same concept, except with the IRAs, if you do the right strategy, right? Like if it's a Roth IRA, you essentially don't pay taxes at all. There's at no point do you pay taxes. So I have seen clients do it. I don't understand why, because it's redundant if you do a 1031 in an IRA, because the IRA does the same thing. So typically the purpose of a 1031 would be so you don't pay that capital gains, right? The IRA already does that with the tax advantage. So it's like a 1031, but with more power, I feel like. How long does it take to set up an account and how much does it cost? Well, my favorite. It takes about 10 minutes to set up an account with us, guys. It's all online, it's very easy. And of course, for the first time investors, we have a great client success team. If you have any questions with regard to the account application or rollovers or transfers, and just you know what? You want one-on-one attention and just ask all the questions you want. We have a fantastic client success team that will help you through the process. But if you like to just, you know what, Donna, I'm an introvert. I heard enough of you already. I just want to do this on my own. It's all easy. You can do it online. The cost of a Madison Trust account is really what makes it unbelievable. And I'm so proud of that because, like I said, our core values have always been make retirement accessible and affordable. Let's help everyone retire richer. To set up a Madison Trust account, it's $50 account setup fee. The investment fee to invest is $50. Incoming and outgoing wire fees are $25 each. Other than that, the only fees, the account maintenance fees, which is $440 a year, charge $110 a quarter. So this is where it gets really great, right? No matter what value your account is, so you could be having that $100,000 account, or you could have a $500,000 or a $2 million or $5 million account. The fees remain the same. We are not a portfolio value based company. We are a flat rate fee company. So the fees are always the same. And of course, thanks to the fact that we are so happy to be a part of the SARE community, anyone signing up with Madison Trust due to SARE has a special code, SARE25, where all the setup fees and the investment, your first investment fees and wire fees are waived, and you'll only have that $440 annual fee charge, $110 a quarter, which is a fantastic deal, especially if you're in real estate. Because guys, let's be honest, what's $440 a year for purchasing property that's going to appreciate, right? And yeah, it's flat rate is always the way to go. Absolutely. And let's see. Oh, Min, I'm a flip of very good information. I'd love to hear it. I thought it'd be insanely more expensive. Flat rate is amazing. I do agree. A lot of people always wait for me to drop the hammer and be like, well, guys, this is going to cost you $50,000. No. We actually pride ourselves in the fact that in the market, there's a lot of custodians out there, guys. I'm not going to lie. It's a very saturated industry. We have always been one of the most affordable, but also one of the most customer service oriented companies out there. And that's why Madison Trust, we've been in the business for 11 years and 22,000 clients later, we have 95% retention rate because once a client signs up with us, we're lifers. Because I have clients calling me that I helped them 6 years ago, still to this day, because that's really the business, right? We're in the business of helping people build wealth, grow generational wealth, and it's wonderful. But is there any other questions, guys? This has been amazing.
Yeah, I told you this group we're like a sponge. We'll just keep learning and learning and like ask a billion questions.
I have never been more proud to be Asian in my life. You guys are awesome.
And we take notes and we share with others.
I
That's
love it.
I have to say, I'm so surprised that I really thought it would be so much more expensive and that like the cost would be like some kind of percentage of your asset. So I'm actually surprised that this is just a flat rate. That's
It's a
amazing.
flat rate. And like, there are other custodians out there that charge that, Annie. And you're right? Because that's the usual structure. But we were built, so it's a funny story, real quick. So our CEO, one of the partners of our company, he had a self-directed IRA with a competitor. And he had a lot of issues, and the fee structure was insane. Like you said, it was based on the portfolio value. And I think it was getting to a point it was unbearable. He was like, you know what? I can do this better. Hence the birth of Madison Trust, where the partners, they wanted to create a company where their clients didn't feel that. And also, they didn't want people to pay excessive amounts of money for what? Again, for us to try to build wealth and retire richer, have a good retirement. Now, before anyone asks, because I know the question will come, yes, we are very profitable. We still are able to make money because at the end of the day, you are able to make money and still make sure products are not expensive. That is absolutely possible.
That is amazing because like I've been actually asking friends around before meeting you about how much they were paying. They were telling me upward of $2,000 to $3,000 and that it took them weeks or months to just like open up and transfer the money over. So that's why I was like, are you really sure only 10 minutes? Like what's is it just is it just an intro form? Like I can't believe like it actually
No,
costs the entire account.
it's the whole account, right? It's all online. It's very easy. And we have, we really care about customer service. Like if you guys take a look at our reviews, like we really want to be that company known for customer service. So if a client does have an issue, give us a call. We're going to sit down with you. We're going to walk through it and we're going to understand what's going on. And all the 11 years, we've really taken the feedback our clients have told us and really implemented into that. Because I myself personally, if it's taking more than 10 minutes, I'm not going to do it. Let's be honest, we're all busy. We don't have weeks and weeks to do this. So typically, open, fund, invest process, open the account, fund the account, and invest the account. We can make sure this gets done in 2 weeks.
Tina has another question. Do you charge
Yes.
extra for checkbook control IRA?
Great question, Tina. So the checkbook control, the LLC portion does have an additional charge, but you have options here. So we have a sister company, Broad Financial. They typically are the IRA LLC facilitators for us. They have their charge. If not, if you have an attorney who's well versed in ERISA, you can set it up yourself, but our investments team will need to review it. Now, the checkbook control portion does have a one-time charge of $1,295. That's $1,295. But this includes the whole shebang setup. That is, we create the operating agreement, we file for articles, we file the EIN, and we help you set up the bank account with one of our banking partners, Titan Bank, who is absolutely self-directed IRA friendly, and also no wire fees, no bank account maintenance fees, which is fantastic. So that's only one-time fee, and after that, it's just the Madison Trust custodial fees, and you do not have any other extra fees associated with it. If you are interested in a checkbook IRA model, give me a call. We're definitely going to take care of you guys with a discount because you are part of the SARE community.
I'm a little surprised about that because like it already costs normally $1,200 to $1,500 just to set up a regular LLC, and you're already doing all of that, and it's a checkbook control IRA.
Yes, ma'am. I'm telling you, you can be in a capitalistic economy like society, but still not be crazy expensive.
Well, then how else are you guys making money? Like seriously, that's like so low. Like,
It,
where else
22
are you making profit? Am I gonna have to talk to a chatbot to get anything? Because like this is really low.
It is really low, but I'll tell you the truth, guys. That is our main way of making money because 22,000 clients, that's a lot of clients. At the end of the day, that adds up. 22,000 and growing
But it's still like 400 something per person or per year. That's
per year. It's still add, and also don't forget the transaction fees. Like even though it's $50, still it's a lot of money.
Well, that and clients that have multiple assets in the IRAs as well.
also
Correct.
is it that because they have multiple assets, then they would have like the multiple checkbook LLCs?
So typically, clients who have multiple assets, they go for the checkbook control, and that's the $1,295. Absolutely.
But then they only need one though, right? Or like
They only, that's
multiple.
correct. That's still just one, and then it's only $440 a year. It sounds so low, but the truth is the volume adds up. So basically, we are more of a volume-based business than a portfolio value-based business, and that's why to us, it doesn't matter if you're a $5 million client or a $50,000 client, we're going to give you the same amazing service because every client matters to us.
And then can you guys share some stats on like how much assets you guys have under management and how many clients or kind of a little bit more of those number stuff?
Absolutely. So we have assets under custody. We have 5.5 billion assets under custody in Q2 when we check. So now we're coming up to Q4, and that's why I said we are a little closer to $6 billion right now, but the numbers will be published by the year end, so stay tuned. We have 22,000 clients right now, active clients right now at Madison Trust with 95 95% retention rate. That means once a client signs up with us, they are for life, unless, of course, they decide to retire or the investment matures. And that's, of course, always, we're happy because that means they've achieved their goal. Madison Trust, our headquarters is South Dakota. So for those of you who are a little familiar, South Dakota is very business friendly. So a lot of banking charters are based in South Dakota. We have our executive office location in New Jersey, where moi sits, hence why I'm a Jersey girl. And we have about 100 plus employees. And something we're really, really proud about is the fact that all of our customer service reps are United States based. You can always get a live rep on the phone at Madison Trust. Every department at Madison Trust, from the client success team to onboarding to support to investment to transfers, you can always get a live rep to help you assist. And if you email us, you'll receive a response within 24 hours. If you don't believe me, take a look at our reviews. You will see it's really what we've been working on.
And she's not kidding. She answers her text messages like crazy fast.
That's really for you, Annie. Like, you make me feel so good.
Well, no, that was my intro like message, and you were like,
Absolutely. We really, like I said, if I didn't love this industry, this company, what I do, self-directed IRAs, I wouldn't be. It's like 10:30 at night, guys, for me on a Wednesday. I had a long week, but I'm still talking about self-directed IRAs because it's amazing. And I've seen people's lives change, and all because we give them that opportunity, right? So at the end of the day, we all can have a little piece of the pie. So that's why I love Madison Trust.
and I love you too for that discount and all this good information.
Absolutely. But thank you so much for having us, Annie. This has been amazing, and we are so excited and always happy to chat, brainstorm, anything we can do as a self-directed IRA experts to assist the SARE community. We are here.
Awesome. Thank you, Dana and Kurt, for sticking around past your bedtime for all this information. So again, everyone, I have recorded this. I will be sending this out along with this slide deck so that you guys are able to get that QR code and get that information. And then after that, we can always, get together and chat more ideas of how we can use these products. So without further ado, thank you so much. Have a great night, and I'll see you guys next month. Take care, everyone. Bye. Thank you.
Thank you.
All right, see you guys soon.
Bye, guys.
All right.